All right. Let me just fix something. We're going to have 0 technical difficulties on this Wavecast. 0. It's going to go flawlessly, perfectly. There's not going to be a single mistake, a single error. Welcome to Wavecast episode 10. I think it takes 10 episodes of anything to get good, right? Right, let me just go in the chat, make sure you can hear me. Is the audio okay? Can you see me okay? Is everything working? There's no echo. The camera's working fine. There's no crazy thing going. There's going to be no mistakes. This is going to be a perfect Wavecast. The camera's not going to drop once. The audio is going to be perfect from start to finish. I've got my phone next to me, so someone can message me if something goes wrong. But nothing's going to go wrong because this is the 10th Wavecast. So hello everyone. Hey Shirley, Tony, Esther. Hey Shaman. Hey Marcus. Shirley can hear me okay. We can hear. The friends can hear me. Yes, all good. Everything's fine. Apart from the cars going by, but that's not my problem. Camera's perfect, says Esther. Sweet. There's going to be nothing going wrong in today's Wavecast. Nothing. It's perfect. So welcome to the 10th Wavecast. And I'm gonna be popping back into the chat just to make sure, fingers crossed, even though nothing's gonna go wrong, obviously, because it's the 10th Wavecast. I am gonna, rather than going off on some massive epic half-an-hour monologue and then coming back and finding out that there have in fact been gremlins, I'm gonna be popping back in the chat just to make sure. Nice to see you all, even though I can't see you. I can see you virtually in my mind. You're all looking very handsome, by the way, very beautiful. So if you can send me a emoji which best describes how you're feeling right now. I need at least 5 to fuel me to go into TradingView to show you guys what I'm looking at. We've got some beautiful market geometry inside Bitcoin. It's so cool to see. But I can't show you until you give me some emotional fuel, right? I need some juicy emotion to keep me going. So Jan's got a big smiley face. Jan's happy. Shirley's happy. 72 smileys. Not good enough. I need more. Come on. Give me more. Nom, 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 nom. Give me more. What's Tony written? A swimming man and I'm not sure, but I accept it. So 1, 2, 3, 4. I need one more that we can dive in. Thank you, Jeffrey. Thank you, Tony. Thank you, Shirley. Thank you, Jan. Who wants to see some beautiful wave counting? All right, F's for seal the deal. Let's dive in. So, by the way, I'm sunburnt. I've just realised I look pretty bloody sunburnt. I'm in Tenerife in Spain. Although Tenerife is it's nearer to Africa than it is to Spain. I swear I'm not as sunburnt as this camera's making me look right now, but you know, the sacrifices we will have to make. Cool. All right, let's go into TradingView. And there we are. Okay, so I've actually gone back in time a little bit because I want to take you through my thought process as this was as this was unfolding. So this is the 20-minute time frame, and you can see here I've got this Hagopian line here. For those of you who've got to module, when do I go through Hagopian line? I think it was module 19. It might have been module 18 or 19. I forget which one. And the reason why I created this line, it's the 28th of November now. That means the last time we spoke, it was the 21st of November. So the last time we jumped on was around here, wasn't it? It's 6 o'clock right now. So yeah, it was about here, right? This was where we were last week when we jumped on together. So price had just broken down below this Hagopian, and it had come up and started to retest this Hagopian. And according to Hagopian's rule, this is where you might have wanted to enter a short position, given that price didn't do anything with the median line that we created up here. And that, and that median line would have been something like this. Right now, this is not a perfect pitchfork, right? It's not a perfect pitchfork because you create your pivots based on pivots that clearly break market structure. But the biggest, most important market structure in this downward move here was this point here. Price broke down, it came up, and this was the lower high. Right. So although this this move up did, knock out some of this descending market structure here, this was all just lower. This is all just one big move. So the next major move there was way up here. So although this move was strong, it's still arguably just part of the same move. It's like lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Right. This didn't create a higher high. So that should be kept in your mind. Right. So this is not like a perfect pitchfork. Now, we got a strong move up, fair enough, and then price did hug the bottom of this pitchfork. I'm not saying this pitchfork didn't reflect some true, accurate market geometry, but this pivot here wasn't breaking any major market structure. So just bear that in mind when price breaks down below this pitchfork. It wasn't a perfect pitchfork. So although we've drawn our Hagopian line, it's not, because according to the Hagopian rule, once you have a well-placed pitchfork and price doesn't reach the median line, you then would be looking for a trade in the opposite direction. But because this pitchfork isn't a perfect pitchfork, it doesn't like tick all the boxes, you'd be potentially cautious about doing a short here. But if you did do that, then obviously you'd have gotten stopped out, and that would not have been a successful trade. And as price from this point, you might think, okay, it's oscillating around the Hagopian line, but at this point, this strength of it breaking back inside the Hagopian line would I hope lead you to believe that, okay, this pitchfork wasn't, I placed the pitchfork, but it clearly wasn't really representative of strong market structure. Price is just breaking down, broke down a little bit more, and now we've got a push to the upside. Now, this hasn't broken any market structure here, so this is something that we would just we keep watching. Now, I can't remember what my wave count was back last week. I can't remember. This is my primary wave count now, and at the moment I'm being really unorganized with the way I organize my wave count, so I haven't got like ordered folders. Like one thing I was saying to, I forget, somebody on the team, one thing that sucks about TradingView is that the object tree, and I'm embarrassed to go into my object tree now, it's an absolute mess. The object tree has a folder system, but you can't have folders within folders. You can't have like folder hierarchies, because imagine if you could only organize your documents inside your computer with a single root, hard drive, and then one level of folders, and you couldn't have any folders within folders. Your documents would just end up an absolute mess. And that's why I think this object tree is too basic. A perfect system would be where these folders would be exactly like the folders in your computer. You can have folders within folders, and you can organize them however you want, by date, by with our wave counting, with your primary and alternatives and all. You can organize them really beautifully, but you can't do that. So that's why it can get pretty unorganized. And I actually find, rather than trying to have all of your wave counts and timeframes within a single chart, it's just unmanageable. So this is why up here I've got these different tabs, and you can see here I've got my this is Bitcoin and Binance, against Tether in Binance. But then over here I've got Bitcoin in KuCoin, and then over at the very far left I've got Bitcoin in Bitstamp, and that's just so I can have completely different setups, and they don't conflict with each other. They don't get in the way. They can just be completely separate. So what I thought I'd do differently. Oh, by the way, I'm going to go back to the chat to make sure you guys can hear me and there's no emergencies. Sweet. you can all hear me and see me. And by the way, same as I do every week, although you guys seem to really enjoy just letting me do my thing. Any questions that you want me to, answer, any problems, any challenges you've got, you want me to look at particular charts, then hit me up in the chat. Charlie says, Andy, still it's viable to check what Bitcoin's chart is doing before targeting a favorite coin. Still it's viable to check what Bitcoin's chart is doing before targeting a favorite coin. I think you're asking me if it's cool to check what Bitcoin's doing, which is what I'm doing right now. It turns that I did 4 simulated trades in BNB. At first, I followed my analysis and applied everything you taught us in the crypto course, in brackets so far, I should say. But I ended doing my trades based on Bitcoin's chart was doing. So I lost 3 of them. You're going to have to, I don't know what you're talking about. You were doing BNB in trades, but then you're doing Bitcoin's chart. You're going to have to let me know what you're talking about. I don't know. But it's good that you were simulating your trades, right? That shows you if you lost most of your trades, then you need to keep simulating your trades. This is not the time to switch to trading real money, right? Isn't it great that you made these losses that are simulated rather than losing real money, right? This is why you simulate your trades. And if you're not doing this, what you need to be doing as well is you need to be documenting these trades as detailed as you can in the spreadsheets that we offer, right? So you're showing your chart entries, you're screenshotting them and you included them in the spreadsheet, right? This is why you simulate your trades. So, all right. So I'm just going to go through Bitcoin and then I'll come back to you, Charlie. All right. Because if you want me to look at BNB, if you want me to look at particular trades, then share a link, right? You can, in the top right, you can copy a link to your chart, share it in the chat and I will load it up and I will go through your trades. And this applies to anybody else. If you've got trades that you lost and you want me to look at and tell me why I think you lost them, then hit me up in the chat and we can go through it. Charlie says basically saw in Bitcoin a final 5th wave and in BNB saw a 3rd impulse wave, but I thought it was the final 5th wave. Right. Well, look, every chart's different. There is correlation and a lot of cryptocurrencies do follow Bitcoin to some degree. But in my experience, the correlation is only when there are really, really powerful movements. Like if Bitcoin just plummets, it takes the whole crypto space with it. And often when Bitcoin explodes, the same thing actually happens to the other cryptos. They actually drop in price, usually because people are shifting over from those crypto to Bitcoin. So basically, if Bitcoin is moving in a really strong way, up or down, that's when the other crypto comes down the other way. But generally, if you're doing a BNB chart, you do your BNB chart, right? Yes, it's nice to know what Bitcoin's doing, but this is why I actually prefer to if you're going to trade one thing, I think best is to trade Bitcoin because then it's not being influenced by any other crypto. Esther says I'm frozen. Am I frozen? I can't be frozen because there can't be any mistakes. Yeah, France says it's all fine. Yeah, there's no mistakes this week. All the mistakes for the entire year happened last week. So this week, this week there's no errors this week. Perfect from start to finish. Cool. Well, I'll come back to you, Charlie. If you want to show me your BNB chart, you want to show me something, I'm going to go straight to Bitcoin. So let's just sort of play this and see what happened with Bitcoin. Oh God, this is going to take ages. But we're on the 20 minutes, so I don't know. Hopefully, it won't take too long. Yeah, there we go. Okay, so price is bumbling along this Hagopian line. So the Hagopian line is clearly representing some market geometry, which is price is responding to, right? Price broke down below the Hagopian line, found support. I've just been given T off camera. Thank you, Rox. And then we've got some clear support. Oh, what's happened? My replay thing's broken. Okay. No, this is not an error. I meant for the replay button to break because it means that if I press this and go here, then the replay button goes back to normal and everything's fine. This is all on purpose. There's no errors. There's no technical errors whatsoever. So I'm going to carry on. It looks like this is breaking, but this is all part of the plan. You guys don't realize this. This is all part of the plan. I didn't want to use the replay tool anyway, right? Because it's better for you guys to learn if I don't use the replay tool. Right. I'm going to refresh this now. I'm going to refresh this chart. Because when I'm live streaming, it's clearly taking up all of the bandwidth. So the replay thingy. Oh no, that is fine. Okay, because I was zoomed out, so I was getting all confused. So it wasn't the technical stuff that was going wrong. I got confused, and that's fine. I'm allowed to get confused. Okay, so now you've seen what happened anyway, but let me kind of try and walk you through my thinking as this happened, right? So, okay, so this move up. Let me just back up a little bit. In fact, let me just back up even more so you can kind of see like the macro of what we're looking at, right? So we've got this this sharp move down, and then this is all corrective. Now I've labeled this as an A, which what follows an A, a B correction, right? A B correction. Now this is obviously all corrective, and the question is, well, where does the correction end? And the way that I've got this is as a W, X, and this triangle here is a Y triangle. And then we've got the move down. So this is the W and this is the X. And now this is the Y here. So I was expecting a Y up, and we've got this impulsive move up here. So that would mean that if this is an A, we'd be expecting a B correction, right? Now, Bs can be shallow. So there was a possibility that this was going to be the B here. And I had this as a W, well, in the moment, you can only play with, what you've got. So as this was unfolding, the first thing I did, well, this is a correction here, right? We've got here this is a WXY. How do I know it's a WXY? Well, because look, this can't be an A because this is a correction. See that? This is a correction. This is a WXY, which means this is a WXY. It's like a correction within a correction. This is also I think this is a WXY. So we've got like double combos within double combos. And let me see if I can find those in my, there we go, right? WXY. Now, as this is unfolding, am I thinking, is this the B? Possibly. I mean, it is a possibility. If I look at my Fibonacci retracement, if I try and find the right one, or maybe I can just draw one anew. Yeah, I'll draw one anew, right? Well, so if we're expecting a B, well then what's common for a B? I mean, you can get shallow Bs, right? Typically a B will be 38.2 or 50%, right? So if we go to a wave A retrace, right, these are the levels we'll be looking at for a wave B. Now, this didn't quite reach a 38.2, but this wouldn't be, wouldn't be crazy. It wouldn't be unusual for the B to end there. So if this is an A and this is then the B, well, then we're expecting a C, right? And as price started to rise up, what's a C? A C is impulsive. Now, this isn't an impulse move. This is not an impulse. It's all overlapping, right? This is a W, X, and a Y. So if we're expecting a C, then why am I getting a corrective move up? And by the way, and this is something I stressed, I wrote a post about, a very quick post today in the community. I was saying that because you see me do my Wavecasts, my forecasts, of the either it's every day or whenever it is, and I say I think Bitcoin's going to do this, I think Bitcoin's going to do this, and I was saying that's not a trade setup. If I'm saying that, okay, if this is the B and we're expecting a C, that's not a trade setup. That's just thinking, well, based on the current wave count, this is the most likely thing to happen. But it's not a trade setup. That's not a trade setup, because we don't know yet if this is the end of the B. We don't know that yet. And the fact that this move out here was corrective, well, if we're expecting a C, right, and a C wave starts with wave 1, and this is corrective. Now, yeah, this could be a leading diagonal, which has a kind of a corrective structure, but that's not likely. It's not the most likely situation, right? It's not the most likely. You start with the most likely. Like, it's most likely that we're still in the B correction. That's the most likely thing, right? Especially considering that we haven't really reached any kind of poignant levels, and the fact that we've got a corrective move out, it's much more likely that this is a W. Let me see if I can find the Elliott. Yeah, it's much more likely this is the W, and then this is the X. Now, at the time, you might have thought, okay, this is the X up here. That's fine. And now we get this corrective move. Again, it's all corrective. It's all corrective. That's correct. So if this is the X, now we're expecting the Y potentially, right? We get a corrective move down, and you might think, okay, this is the beginning of the Y. I don't think this would be the completion of the Y, because you've got this X, Y, and it's a bit short for the Y. What you would do, and I think I've done it. Where is it? Yeah, here we've got a modified shift. And what is a modified shift? A modified shift is just your corrective channel. Right? See that? It's the same thing, right? The channel is a modified shift. It's exactly the same. Although with a modified shift, you can have the warning lines. You can keep on. You can continue that frequency. You can expand the frequency out. So the modified shift just gives you a lot more functionality. So it's if you just want to do the path, just show it really, really simply, which is fine as a temporary measure. Then that's fine too, right? So here is our corrective channel. So if this is if this is the X and we're expecting the Y, we would expect the Y to come down to the bottom of this channel. Now that is what happened, and one wave count might be that, yeah, this is the X, and this is the we've got the WXY here in the, I think that's the that's the minuscule. So if I look at the wave count, yeah, so I've got here as an A, B, C, although this is I think that's changed since. I'll come back to that. Yeah, so look, this could be the WXY here. It could be the case, but my preference after this move is I like that more, because we've got a strong move down after this, and it makes more sense to me that this is a WXY, and then we've got the strong move down. Now, as this was unfolding, however, we got this kind of, I'll go back to where we were before. Let me pop back in the chat and make sure everything's working okay. Charlie says, how can I send the link to my charts? Well, you go into TradingView, and up here, it says copy link to the chart image, right? You click on that, it give it a few seconds, it'll copy it'll make a web link, it'll copy it to your clipboard, what they call it, and then you just paste it in the chat, right? All right, cool. So as this is unfolding, right, we're thinking, okay, is this the W? And we get this, potential like sideways move here, X, and then that would mean we'd be expecting a Y down. We got that. That could be a particular wave count. One thing that somebody else suggested as this was unfolding is they thought, oh, is this a triangle, right? And I think there was like potential like a W, X, Y, sorry, A, B, C, D. Yeah, maybe that was like an option. And obviously, if this was the B wave and this was a triangle, well, that would anticipate a completely opposite move. That would anticipate a strong move up, right? A really strong move up. And it's one of these situations where that's just kind of one of the calls you've got to make. Now, even like if you're seeing my favorite correction in the fourth wave position is a triangle, because you can be much more confident that you are in the fourth wave, because what comes before the fourth wave? The third wave. And the third wave is the wave that has the most volume. Now, because we're looking at a correction in potentially the B wave position, it's it's not as super clear, because where any correction, whether it's a triangle, like if it's a triangle within the fourth wave, or it ends up being a double combo within the fourth wave, whatever happens, you're expecting the fifth wave to continue the direction that the third wave was showing you. But in this particular situation, we're kind of questioning whether this entire move is a fourth wave triangle, sorry, a B wave triangle, in which case the next move would be the C wave, or as my prior wave count, my existing wave count is showing you that this is just part of a unfolding correction. If this is a W and this is the X, or as I later labeled it as this is the X, we're expecting one more move down to complete the B wave, right? So in that situation, you haven't got a trade, because if you've got two wave counts, a triangle which predicts an up move, a strong up move, and another wave count like this one which suggests a down move, you don't have a trade, right? And now there are ways you could hedge. You could have a buy order. If you're like a breakout trader, you could have a buy order like up here out the top of the triangle, and then a sell order out the bottom. That's not my style, but that is one way that you could do it. And what's interesting is when we lay over the pitchforks, right? We lay over the median lines, and I show you what I was seeing, right? So the first pitchfork, I'm not sure if I'm going to get these in order. So the first, we had the modified pitchfork first, right? And that showed us some really nice geometry, which you're going to see in a little bit, right? But we can see that price found some beautiful resistance along the top of this modified shift pitchfork, and that, like where I've got the X over here, like where it ended, is just absolutely perfect. We get a couple of touches. I don't know if you can see that if I zoom in, right? Some beautiful touches before it breaks down. Really, really, really nice, right? So that's the first pitchfork, and then we've got this one from earlier, and this was I think this is a modified shift as well, right? So this I'm going to just brighten this up a little bit so you can see it. We've got this like really, really beautiful modified shift, and I've just gotten rid of the upper and lower parallels just to kind of show you the most important lines in this in terms of what we're looking at right here. Now there are warning lines that were really cool to see. In fact, I'll just turn these on. So I'll turn these all on, because I this is just like showing how the frequency perpetuates into the future, right? So what's that line? Why is that straight? That should be like that. There we go. So we can see that the frequency of this perpetuates into the future. Not perfectly, but it does perpetuate into the future. So that's the first thing we're looking at. And I've got to be careful not to put too many pitchforks on the screen at once so I don't overwhelm you guys. Okay, so this was the first pitchfork that I laid over. Let me just bring this. I'm going to dull this. In fact, I'm going to just fade this up for a second. Okay. So these were the two pitchforks that I used first, right? First, we had once I had this move up and it started to move back down, believing that we've got a W, and at the time believing this was the X, and I thought, right, this is a perfect place to put the modified shift pitchfork, and we got some really, really nice price action responding there, and I also created this bullish pitchfork here. And you can see this is exactly where price broke down. And because we had these this crossing, right, this crossing of the beams, I put the first energy point over here. Now I moved it over to the left slightly because I think, there we go. So this is, in fact, you know what? This is the first pitchfork. Sorry, I'm getting confused. So this is the first pitchfork we created. This red one came later. So this. Once we had this move down, which broke this market structure, and it broke this. No, it didn't break that market structure, but we got lower lows, lower highs, lower lows, and then once we went up and broke this market structure here, I thought that would be a really nice. We got a P1, a P2, and then as this started to break down below here, I thought this might be a potential really nice P3. So, and considering we're expecting a B move down, this now was my main primary pitchfork that I'd be using to plot the direction of this B wave. Now, as price comes back down. In fact, let me just remove this red one. I'll rename this to red pitchfork, and we'll come back to that. We'll also come back to this modified shift, right? Now, as price breaks down, what we're looking for is a retouch of this upper parallel for our potential short position, right? Now, I haven't done any trading because I've been working on module 20. And if I'm working on a module and I've got a trade open, it's just, I can't do it. I'm just constantly like distracted. And but the way that you would enter this as a potential trade, you've got this beautiful retouch here, right? Here's the first retouch. Now, one retouch isn't enough, right? Now, you might be a different kind of trader where you want to, just the first retouch. But we don't know this is P1, this is P3. We don't know that, right? The first sign, the first sign that this is P1 is it hits the upper parallel and it breaks down, right? It breaks down, and especially if it breaks down and breaks market structure, and that's exactly what it's done, right? You can see here this point here. You see that? That's the higher low. Price breaks down below that market structure, breaks it, and then comes back up. This is perfect. This is when we're looking for the retest. And on this second retest of this upper parallel, this is where you would place your short entry. Again, this is not financial advice, although this is in the past. You can't get in here, but this is not financial advice. I'm not responsible for you losing all your bloody money. I've got to say these disclaimers. But this is the way that the strategy that you would use. This is how you use Andrew's pitchforks, layered on top of your Andrew's on top of your Elliott Wave foundations. But when it retests this lower parallel, this is the entry, right? Now, where do you place your stop? Now, some people might place their stop here, and you would have still been fine. But personally, again, what's our entry? What's our profit target? The profit target is this lower parallel because the price has an 80% chance of reaching it. Given if this is WX, then we're going to be expecting Y to, because again, I think this is when I would put on the modified shift there. So if this is our modified shift, this is our correction, we would be expecting price to come down here. And if that's the case, well, then we would kind of expect price to, this would be the point right there. If we're looking at price coming down, then this is the point right here. So this is where you would put the target. And right now, it's giving a 3.62 to 1 ratio. That's fine. That's fine. Personally, the stop loss, the ideal stop loss is back here past this, way past this market structure to here. The problem is that doesn't give you a 3 to 1 reward to risk ratio. So the best stop loss is past this higher market structure, but that's not going to give you a trade. Now we have, if we had a retest back here, then this stop loss is too close. But because we've got this really strong move down, we've got a retest, we've got a test here, and we've got a break of market structure, then I think it would have been okay to have your stop loss above this, above here. I think that's enough. That's enough distance, and it's giving you more than a 3 to 1 reward to risk ratio, right? So if that's our trade, we can see that for those for traders who place their stop loss below these immediate market structure here, right? They just get taken out by this stop loss. This is a clear stop loss hunt, right? The stop loss snipers, they just break through here, gobble up all this beautiful liquidity. But because we've got our stop loss placed up here, we're fine. And then price breaks down, stays within this upper parallel. And now this is interesting, right? Price breaks up, and it starts to travel away from the median line. Now, what do we do in this situation? Well, you only ever want to exit a trade if your trade idea is no longer viable. If your trade idea is no longer viable. Now, we've got our modified shift. Price is breaking up to the upper side of our modified shift. And until price breaks out outside this modified shift, we're still within the correction, because this modified shift represents the corrective structure that we've analyzed, right? So we've got our short, in this case, it's obviously after the fact it's simulated. We've got our short here. We've got our stop loss. It's, we've decided what our risk is going to be, and price is kind of going sideways from here, right? It's not blasting up through the upper parallel of this modified shift. It's kind of going sideways from here, right? And you can see this is why I've got the energy point here, because this is where all of these, we've got the first warning line of this green pitchfork. We've got the Hagopian line from back here. This is crossing this area here. We've got the upper parallel of this modified shift here, and also we've got a few more little things there. We've got my bullish, in case the reason why I've got that is just in case we've got the W, and this is part of a greater X that's going to continue upwards. But as this price starts to drift sideways, it feels like we're running out of buyers, or there's a battle going on. There's sellers that are coming in, and they're pushing these buyers. Then it's preventing price from climbing higher, and it's just kind of just drifting into my energy point, right? It's drifting into this beautiful zone here. And if I turn on some more pitchforks, we've seen that one. That comes later. Yes, this is kind of where we're at. And then we get into the zone, and price just explodes down, right? And it just pings the now. When you've got a trade open and you're targeting a diagonal line like this, right? You're not, because when you're doing like a fifth wave trade and you're targeting like based on Fibonacci levels, like Fibonacci extensions, then those targets are going to be fixed. But when you're targeting a diagonal line like this, you're not going to set your profit targets like just set and forget. You're going to be dynamic, because look, when you set this short position up here, right, the first focal point would have been where the lower parallel, which is here, of this modified shift, and the median line intersect right here. That's your target. But as price drifts sideways, well, the median line's way down here. So as this breaks down, especially with this strong move here, right, and it comes down, and this is breaking down with force. Now you're going to move your target down here. Now you might want to take some profits down here, or you might want to just go for gold, right? And that's where the target is right there. So that would have given you a beautiful 4.81 to 4.8 to 1 reward to risk ratio. That would have been a really beautiful trade. It pinged the median line, and you saw, I think price was right here. So this morning, price was like here. Price was pretty much there. Like, yeah, 8.20 this morning. That's where price was this morning. And you saw, if those of you who saw my wave count this morning, you saw I was predicting another move down. Now, why? Why was I predicting another move down? In fact, let me see if I'm going to put it out to the chat. Why do you guys think I was predicting another move down? All right, I'm going to the chat, see what you guys think. Oh, wait, Corey says no sound. Is that right? There can't be any errors. Are you guys hearing me okay? Yeah, parents, no tech probs. There's no tech probs. It's impossible. Okay, well, look, hands up. Come on. Why did I successfully predict that we're going to get another move down? Zifa says, looks like a third wave with that volume. Maybe. Yeah, it's not a bad guess. Corey says, wave 4 retraced to 1. Retraced to 1. Let's have a look. Wave 4 retraced to 1. What do you mean to 1? What do you mean to 1? Oh, do you mean like one of these parallel lines? What do you mean to 1? To 1 what? Shaman says it looks like the fourth wave of a lower degree. Tony says, is it 70% chance of moving through median line? You're all, there's right answers within what all of you said. But look, whether or not this is wave 3 and this is wave 4, or as I've labeled it, that this is actually a completed wave A, because I can see a wave 1, 2, 3, 4, and I just think this might be an extended wave 5, right? But this could be a wave 3, but it's way simpler than that. It's way simpler. This is corrective. Look at it. this is a beautiful, this looks like a beautiful correction. To me, this looks like a beautiful correction. And I forget which module where we went through this. It might be module 12 maybe, where Neely's little technique for looking at when he thinks an impulse has ended, and you look at the sharp angle of this, and you know this angle, it's not what you would expect. And so I think, okay, well, this is corrective. So it's way simpler than any of you guys are thinking. This is corrective, and that means we've got another push down. This correction has ended on the upper parallel of this this green line. It hit the median line, bounced back, hit the upper parallel, formed a beautiful kind of like corrective channel. I haven't drawn it, but it looks really nice to me. So to me, combined with the fact that we've got this move down here, we've got a correction, and I think, well, look at these energy points down here. Did I draw any more? I did draw some more pitchforks. Oh, we'll get back to that one. Let's have a look. I don't know what that one is. Yeah, and also, yeah, I continued the frequency from our original modified shift back here, and I was just seeing all these crosses over here, right? So I did the second energy point right there. I thought, right, there's all these crosses over here. I'm expecting another move down, and I thought, well, that's kind of what I'm looking at, and then I'll just get rid of this, and this is what we got. We got this really nice move straight down into the energy point. Now, this is new. This is new. I haven't looked at this yet. So let's have a look. Yeah, I mean, I think this looks like a beautiful impulse, and this is now the beginning of the C. And what's really nice, right? We've got this correction here, right? And then we've got what I think is just another stop loss on. I think people are people are going short here. They're placing their stop losses right here, and then the professional traders just come in and they want some liquidity, and they come in and gobble it all up, take all their shorts out, and then they just drive the price right back down into this energy point. And we've got this really sharp move up, which breaks all the market structure, and that's when I would place my next pitchfork right there, right? I'm going to get rid, because it's getting a bit busy, right? I'm going to get rid of, there we go, just get rid of, although I think all of these pitchforks are still representative of some key market structure. It does get a bit confusing, doesn't it, when there's just a crazy amount of pitchforks on the screen at the same time. So oh yeah, that's it. So I've put that up there because I thought I saw some geometry there as well. So I'm going to keep that. I'm going to keep that one up as well. But we can see once we've got like the green one and the blue one, it's getting a little bit busy. So considering that we're now looking at this big macro, this really big, beautiful pitchfork, I'm going to just turn off the green one, just because we're not looking for a downward move anymore. Now there still might be frequency to respond to, so we can always bring it back, but I'm going to get rid of that now. And should I get rid of some more ones? I can still see price responding to this geometry here. So, but in terms of just making it really easy for us, just to clean things up, right? In fact, let's just for now, let's just clean things up really, really nicely. So that simulated short was oh, and here we go, right? Let me bring back the Fibonacci levels. So we can see that price has come right back down to the 0.618. Really, really, really nice. So this final push down brought us to a really beautiful level, right? Let's just get rid of that, right? Oh, so cool to see, right? So now, one little thing, by the way, there is a chance that this is corrective, right? I've got this down as an impulse. I've got this down as a 1, 2, and then a 1, 2, 3, 4, 5, 3, 4, 5. I think I've got my Elliott wave somewhere. Oh yes, that's what I've got here. A, B, and the C move down. And then I think, I can't remember where my Elliott wave's gone for here. It's gone, it's somewhere. But I had this as a 1, 2, 3, 4, 5. But there is another argument. There's another kind of counter wave count that has that as a correction. So there's like a 20% chance that this is going to be a Y rather than a C. But we'll see. We'll watch this unfold. So I've got this as P3 because we've got this strong move down with a strong move up, sorry. And if we were looking for an entry, not trading advice, this is not a trade setup. I'm just sharing my thoughts. If we were looking for an entry, we'd be looking for price to come back down and test this lower parallel. And that's not an entry because this hasn't been tested yet. We want it to test, break higher, and come back down and test it a third time, right? And the issue, one of the issues we have, there's no stop down here. Look at the nearest market structure is way down here, right? So if we get a strong move down really close to this, I mean, there's the way you're going to put your stop loss. We're going to have to wait and see what happens, right? Because the perfect situation is you would get another move. It would test the lower parallel. We'd get another strong move up, and it would break. We'd get another higher high, and then we'd get another final test down, and that would be our entry. But we're gonna have to see how this plays out. But we've got this is a really, really big, a really nice, beautiful pitchfork. If we can find a nice entry with a low risk, meaning there's a nice place to place our stop loss, and because look. I'm not the only person who's going to be seeing this. We've got a lower low. The lower low, we'll look at this divergence with the volume. Look at this. We've got the price coming down. We've got the divergence here. If I go to the momentum, we've got the same thing. RSI divergence, MACD divergence, right? I'm not the only person who's going to be seeing this, right? Now, this is prime pickings for the stop loss hunters, right? So price is going to come back down and test this. And, and there's going to be lots and lots of longs. And I would not be surprised if we get another poke down. And that's the problem here, right? Where are you going to place your stop loss? Now, there's a point here, right? There's some market structure here. You could place your stop loss below here. That's the nearest thing I can see. So I think that might be the wisest thing, right? If we are going to get a test here, a break up, another test, look, you could actually play on side with the institutions, and you can play some buy orders here. You could place some buy orders down here if you wanted to play that game. Again, not trading advice, but this is what I'm looking at, right? And if you can get into a trade here, and you can get into a nice position with a good stop loss that's not too tight, and it's behind some key market structure. And this isn't ideal. This is not really behind some key market structure, but it's enough distance away where you might be saved from those stop loss snipers. And if you can get into a nice position there, right? Let's say we get in over there, right? And let's say you like down here, right? Well, that's look at this up here. That's like a 4.3 to 1 ratio, approximately, depending on where price gets to. And if this is the A and this is the B, and we want to look at where the C is likely to end, well, then we can create a corrective channel, or as it's that's not right. As it's often known, a modified Schiff pitchfork. And this is going to give us our potential target for wave C. Let me clean this up, get rid of these points here. Right. So this is potentially where we might be heading up here. So if that's where we're heading, then we've got just a beautiful reward to risk ratio. Now, one thing I said to Shaman today, this statement is always true. This statement is always true. The price could come down lower. That's always true. If you're looking at a potential short, the price could keep going up. This might not be the end of the move. We might be looking at another move down. I've placed this as our P3, right? And I've got this as our A, B, C. Now I haven't looked into this deep into this move down to see if this is definitely a C wave, but there is a chance that this is still the B. This is still the B wave, and we've got another strong move down, and that strong move could be the stop loss snipe that we're gonna see. We don't know. We never know, right? We never know. So that's why we would wait for price to unfold and just kind of see what happens. And then see if we get a interesting trade setup. But if we can get into a nice move here, we've gone down to the 6.18. The next point down for a wave A retrace, the next move down would be, you could place your stop just below there, because then it's below this market structure here, and it is also just below this next Fibonacci level there. And with such a great move up, we have some flexibility with our stop loss, because even if we've moved it way down here, we've still got a 3.5, approximately 3.5 to 1 ratio. So at the end of the day, it comes down to how confident are we that this is a correction of this move. And I think that we've got, if you look at the angle of this move, it looks really, really strong. And this move has drifted sideways somewhat. So, I'm personally quite confident that we are going to get a move upwards. Again, not trading advice. So this is a situation where I think it's okay to have a larger stop loss. But regardless, whatever you do, you're never going to risk more than 2% of your entire available capital. If you do, you're an idiot. You're an idiot if you're risking more than 2% of your entire capital. And I think that when you're first starting, and this is not just what I think, you should be slowly upgrading the risk that you're taking from a much lower risk. When you're first starting, if you're not consistently profitable, you need to be risking no more than 1%, even less than that perhaps, right? You reward yourself by being allowed to risk more capital of your available capital after you are getting more consistent results. I'm going to just change the light here so you can see my beautiful face. There we go. That's better. Sweet. So, in fact, let me just turn this down a touch. There we go. So that's it. That's our. There we go. That's our hour together, and we'll see what price is gonna do. So that's it. So let me go back to my little camera. Nice. So how did you guys like episode 10? No mistakes, no errors, no technical issues whatsoever. This has been a perfect, seamless episode. What are you guys saying? Okay, give me the emoji that best describes how you're currently feeling, given how perfect this stream has been, without any errors whatsoever, without any mistakes. I haven't made any mistakes. The computer hasn't made any mistakes. The camera hasn't fucked up. The microphone's been working the whole time. I mean, how can you have any complaints in life whatsoever? This has been a flawless, probably the first flawless Wavecast that we've done so far. Jan's happy. Adam has had a mind orgasm, I think. Shirley's feeling heavenly. Ference is feeling cheeky. Derrence is in love with me. Understandable. Charlie. Oh, I never got to Charlie. Charlie must admit the double combos and Poseidon tridents. That's pitchfork is probably easier to say. Still confused me. But yeah, if Charlie, if you haven't got to module 18 and 19 yet, then of course they're going to confuse you. I must spend time studying those modules. Giuseppe's happy. Tony's feeling strong. Shaman is feeling starstruck. Esther, thanks for a great session, Andy. Benefited a lot. You're welcome. Corey is feeling curious. Marcus is feeling cool. Sifa's feeling cool. Nice. Everyone's feeling good. So Charlie, I didn't get to your charts. My bad. I should have come back to the chat and reminded myself. So for the next Wavecast, in fact, yeah, this is for all of you. For the next Wavecast, from now until next week, if you're doing a wave count or if you're doing a simulated trade and something happens that you're just confused by, save it, right? Save the chart. So either download the image or you can do what I showed Charlie, where you can it will give you a link, right? And save that link because it keeps it live online. Save that link, and then when we go live next week, immediately, because today I wanted to kind of just run you through this kind of cool market geometry, this cool move. There was a great potential setup, and there's a coming great potential setup, although that's not trading advice. When I say setup, I'm just sharing my thoughts. That means next week we can go over a little bit of Bitcoin, but then also we can just go into your charts. And that'll be quite cool. So if you're prepared and you've got some links to share to show me next week, then that'd be really, really cool. Okay, so that's the Wavecast. tomorrow, I've got the first episode of the Lionosphere, and the Lionosphere is the name for the community. This is rather than me just God mode saying this is our community. It's not my community. So I think the Lionosphere is a really cool name for the community. It's better than just saying the Lions community or the King Silver Lions. So I think the Lionosphere is cool. If you guys hate it, let me know. But tomorrow is the first episode of the Lionosphere, and it's a similar format to this, although instead of doing wave counts, it's just me sharing the broader updates, the vision for King Silver, what's happening in the broader context of everything, what the plans are, where you guys fit in, and then I can answer any questions you guys have at all about the broader King Silver vision, plan, roadmap. So if you're around, check the schedule, check the events. I think it's the same time tomorrow. It might be an hour later, but check the schedule. And if you're around, then come hang out and we can talk about just everything that's going on and where we're headed and how you guys can play a role in that. So that concludes episode 10. Hope you guys have enjoyed it. And I will see you guys in the next one. See you later.